Good morning, traders. This is Joanne with In Forex. Welcome to our Forex market news broadcast for Thursday, February the 28th, 2008. The dollar dropped to an all-time low against the euro and a basket of currencies on Wednesday after Federal Reserve Chairman Ben Bernanke signaled for further interest rate cuts in the fight to avert a U.S. recession. The dollar dropped to all-time lows against the euro and a basket of currencies on Wednesday after Federal Reserve Chairman Ben Bernanke signaled further interest rate cuts in the fight to avert a U.S. recession. The risk of a contraction in the world's largest economy were again heightened by a report showing new U.S. home sales fell in January to the lowest rate in nearly 13 years, and housing inventories swelled despite falling prices. Bernanke's reiteration that growth risk rather than inflation were the main focus for the U.S. central banks left investors anticipating another 50 basis point cut next month. The euro dollar surged as high as 151.82, an all-time high. Despite the dollar's latest collapse, analysts are not losing hope just yet for the greenback's much-anticipated comeback in the second half of the year. With the Fed expected to lower the Fed funds rate target by at least another 100 basis points before the end of the current easing cycle, the euro could test 153 in the short term, analysts are predicting. The Fed has cut its benchmark overnight lending rates by 225 basis points to 3% since mid-September, while the ECB has kept its main rate at 4%. The rising prices for oil and other commodities are stoking inflation pressures, putting the Fed in a difficult position. The rallying commodity prices have helped drive currencies like the Australian dollar. It rose to a 24-year peak of 94.57 earlier today, and the New Zealand dollar jumped to a fresh 20-year peak at 82.15. The dollar Canadian was trading at 98.15 after hitting a 2-month low of 97.59, while the euro pound jumped to a record peak of 76.38. The Asian session was focused on Bernanke's painting a dim picture of the U.S. economy in his testimony to the Senate Finance Committee. After the strong U.S. dollar sell-off that occurred yesterday, the foreign exchange market settled into a comfortable range in the Asian session. The euro dollar set off the 151.38 highs, but still was well positioned above the 150 level. It is currently trading around 151.80. While we expect the Eurozone officials and corporate to complain noisily, the ECB will in all probability remain entrenched in its fight against inflation. The euro-dollar should continue to head higher in the near term. The risk to this economic outlook remains to the downside. The risks include the possibility that the housing market or labor markets may deteriorate more than is currently anticipated, and that credit conditions may tighten further. This was just part of a gloomy forecast from Chairman Bernanke at yesterday's House Financial Services Committee testimony. He continued to suggest that the U.S. will see sluggish growth but avoid an outright recession, and his comments clearly hint to further easing of monetary policy. The market is pricing in a 25 basis point cut on March 18th, but there is growing feeling that the Fed may trim the rates as much as 50 basis points. The figures released in Japan confirmed that its economy is enduring the effects of the global slowdown. Industrial production month to month fell lower than expected to a minus 2% versus a minus 0.8%, which was expected, while large retailer sales slipped to a minus 1.9% versus a 1.6% that was expected. Given the Bank of Japan's consistent stance on monetary policy over the recent months, we expect fundamentals to have little effect on the yen pricing. Trichet spoke this morning, giving the intro remarks at a lecture organized by the Nederlandsche Bank and the Netherlands Institute for Advanced Study in Amsterdam. I apologize for any mispronunciation of the bank's name. Given the recent strength of the euro, traders will keenly listen to what Trichet will have to say. If he does stray into the realm of monetary policy, we expect him to stick to the no rush to cut rates posture. There is a risk that the U.S. fourth quarter GDP growth could be revised up given recent contributions from inventories and exports. However, these gains may have to be balanced by lower consumption. Either way, given the market's overwhelming bearish sentiment, there is considerable risk in this release. This concludes our news broadcast for today. We hope you are finding this helpful in your trading and that you are having a great trading week. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you will find a link to our Yahoo forum, which is also Succeed in Forex, and some additional information about our Traders Trading Center, where our motto is Traders Helping Traders Succeed in Forex. Have a wonderful day, and we hope you'll be able to join us again tomorrow. Happy pipping!